I'm Mark Crumpton. You're watching Bloomberg Technology. Let's begin with a check of First Word News. House Speaker Paul Ryan today defended President-elect Donald Trump's choice of Steve Bannon as a senior advisor, despite criticism that Bannon provided a platform for white nationalism while at Breitbart News.
The president is going to be judged on his results. This is a person who helped him win an incredible victory, an incredible campaign. The president's going to be judged on the results of this administration.
Senate Democrats disagreed. Retiring Minority Leader Harry Reid had this message for the president-elect.
Rise to the dignity of the office of President of the United States instead of hiding behind your Twitter account, and show America that racism, bullying, and bigotry have no place in the White House or in America.
Politico reports that billionaire investor Wilbur Ross, one of President-elect Trump's economic advisors, is the leading candidate for Commerce Secretary. The families of some of those killed during the 2012 Sandy Hook Elementary School massacre are appealing the dismissal of their lawsuit against gun manufacturer Remington. The families say a weapon designed for combat was marketed to civilians. U.S. Secretary of State Kerry says Yemen Shiite rebels have agreed to a ceasefire scheduled for Thursday. However, the Yemeni president rejected the initiative. I'm Mark Crumpton. Bloomberg Technology's next.
I'm Corey Johnson, in for Emily Chang, and this is Bloomberg Technology. Well, coming up, Snap is filing to go public. Sources say it may be the biggest tech IPO in recent years. Could come as early as March. Plus, the FANG stocks stop the bleeding. Facebook, Amazon, Netflix, Google, they were left out of the post-election rally. They've come roaring back. And Palantir co-founder Joe Lonsdale joins us on his longtime colleague Peter Thiel and how a Trump presidency could impact technology. But first, to our lead, Snapchat begins the process of going public. The parent company Snap is said to have filed confidentially for an IPO under the Jobs Act. That's something a company can do if it makes less than $1 billion in gross revenues. We reported last month the company would seek as much as $4 billion, a valuation of anywhere from 25 to $40 billion. Again, that's on less than $1 billion in revenue. With more on this, Bloomberg Technology's social media reporter Sarah Fryer and Y Combinator partner Justin Kahn, who just founded the live video platform Twitch. Glad to have you both. Sarah, first with you, what's the news?
So Snapchat is filing confidentially because it doesn't have $1 billion in revenue yet, so it can do that via the law. This IPO could happen, as you said, as soon as the first quarter of this year, maybe as early as March. And we've reported it could be up to $4 billion in what they raise. And this is really incredible, considering that they filed to go public before the election. Everything still seems pretty much on track.
And Sarah, same with you. Fairly amazing here that if we're talking about a $25 billion IPO, not even $40 billion, that'd be 25 times revenues at best, right? Because we went under the Jobs Act. Facebook went out at 12x revenue and collapsed afterwards. This is a very aggressive pricing.
This is absolutely aggressive. What they're going to try to emphasize, though, is their growth potential. Snapchat is very early on their path for revenue, and they already have about a third of Facebook's users in the US. They're definitely not making as much money off every user as Twitter or Facebook do. Twitter has fewer daily active users and is expected to have $2.55 billion in revenue this year, according to our analyst estimates. Snapchat will probably have about $350 million, which is definitely a fraction. So their point is definitely going to be to emphasize growth.
Right. Justin, let me ask you, you had the tiger by the tail in Twitch, a business that grew so fast and had so many users and such revenue, not unlike Snapchat. And I wonder what your take is of a company deciding to go public with the backing that they've had.
Well, I think Snapchat has a tremendous network effect that's going for them. They have normal people who are using it every day, many times a day. I don't think that's likely to change, and I think that's likely to grow as more and more people come online and spend more of their time on mobile around the world. So I think the long-term prospects for Snapchat are extremely strong in usage.
But what do you think about the IPO as a way for a company to get out, as a way for a company to decide to grow the next step?
It makes sense. I mean, the IPO is like a necessary part of your evolution as a tech company, as a way to get liquidity for your early investors. to get liquidity for your early employees, and I think it's all part of the process. I think the price is pretty high, but I think that we'll see in the long term, these tech companies that have a strong network effect will be extremely valuable. People think Facebook is super valuable right now, but they only have 1.7 billion people, and there's billions more that will eventually join Facebook.
I have a chart on my Bloomberg terminal right now that shows IPO business, but the IPO business, we'll get to that in a minute, but the IPO business itself, Sarah Friar, has been very quiet. In fact, if you look at this chart on my terminal, you can see that the numbers that we're talking about, how many IPOs have happened in recent years, really low numbers for 2016, and this is on a dollar basis. You go back here, you see some of the benefit from Facebook kind of in the middle of the chart, but fundamentally 2016 has been enormously quiet. Sarah Friar, why is that?
There have been many factors as for why we haven't seen as many IPOs as we've expected. One thing we keep hearing over and over is that 2017 is the year that we might see the likes of Snapchat, Uber, Dropbox, Airbnb get a little bit more serious about going public. But Corey, the fact of the matter is that private capital has been extremely easy to get in recent years. And it looks like that may have peaked around 2015. And now companies are having to look for other sources of capital as VCs and later stage investors want a return on investment, getting a little bit more skeptical about growth prospects.
Yeah, I can't wait to actually see the prospectus and see what the numbers really look like and see the spin that will surely be a part of that. I want to say with
anyone who wants to leak it to us.
Yes, but come on in, come early and often. Bloomberg's here to help. Sarah Friar's there for you. Look, let's move. I want to change the subject a little bit, but staying on social media, Google and Facebook have announced some actions to stop users from pasting fake stories and deriving revenue from those. That's after critics pointed fingers at these stories may have influenced the U.S. presidential election. Sarah, let me start with you. I mean, this is a story that's really kind of exploded in recent days after the election of Donald Trump for president. And I think to me the strongest thing about this was that story in BuzzFeed about the Macedonian bloggers who are putting up fake stories to generate clicks to get paid.
The fact of the matter is this is an extremely lucrative business if you can figure out a way to play it. The outrage sells, the clicks are easy to get on these social platforms, and Facebook, for its part, needs to take a very close look. It is taking a very close look at its responsibility for distributing information. And fake news is one thing, and that might be easy to quash, but what might be even more difficult to address is these more biased stories that just give you some of the facts, maybe create a misleading perception, and aren't necessarily fake, but are definitely more propaganda-like in their nature.
Well, and indeed, you saw the story that was the fake story of a pending Hillary Clinton indictment, then sort of trumped up, pun intended, by Fox News, and they actually ran with that story, which of course wasn't real. Justin Kahn, Facebook's founder Mark Zuckerberg says only 1% of the stuff up there was fake.
I think that is completely wrong.
You think that's fake?
I think that's not accurate. If you look at that story that you just mentioned, it started on a viral site that was newly registered, a new site, and that story was shared 216,000 times on Facebook, whereas the New York Times story that was actually true, that said Hillary Clinton was the FBI was clearing her of all charges, was only shared around 80,000 times. And so, the impact of some of these fake stories can be extremely huge, and I think it's Facebook's obligation, its ethical responsibility to not help spread fake news.
Did Facebook make money on the spreading of fake news, Justin? And what level do you think that happened?
Well, I don't think it's necessarily direct, like Facebook is profiting off of this fake news specifically, but the Facebook news feed is optimized for engagement, and that means people click on what they want to see. They oftentimes people click on what confirms their biases, and so Facebook has optimized their algorithm to show people what they want to see, and oftentimes that doesn't correlate 100% with what's true.
So it sounds like what you're saying is they did make lots of money on these clicks. They might not have done it intentionally, but their business model was set up in such a way that they were great beneficiaries of all these clicks on all these fake inflammatory stories that had people, as you said, confirming their own biases, Justin.
That's right. I mean, Facebook is basically optimizing for engagement, and when people are engaged, when they click on something, when they like something, whether it's true or not, that person is more engaged with Facebook, spends more time on Facebook, spends more of their attention on Facebook. And so they are benefiting from it.
And Sarah, on the last conference call at the end of the quarter, Facebook warning us that revenue growth is going to slow down. They talked about ad load, but Mark Zuckerberg talked about the influence of the election and how many election-related posts were clicked on, citing that as one of the things that was strong for them in the third and presumably part of the fourth quarter, but maybe not going forward.
And now they're trying to say, we didn't really have a big influence on the election. We're just one of many outlets that people can get their information from. And I think that really masks the fact that Facebook is now a place where a very large percentage of Americans find their news, get access to their information. But Facebook itself, internally, they want to be seen as a medium for this information, not really in control of how it spreads. They want to be a place more for posts from friends and family. But guess what? This year, a lot of posts from friends and family have been about the election, and they have spread a lot of these things. And Facebook wants to be as far as possible away from being any kind of arbiter of truth.
Right.
But I do think that there are some technical ways that they can address this problem that don't go against their neutrality in this.
Yeah, it's an interesting problem for them. Surely we as journalists have had to deal with this for centuries, but it's a whole different animal for Facebook. Justin, thank you very much. Justin Kahn, partner at Y Combinator and Bloomberg's Sarah Fryer, thank you very much as well. All right, still ahead, Palantir's co-founder John Lyons. We're going to talk about this company that may even be looking at an IPO sometime soon, and their close ties to Donald Trump. This is Bloomberg. All right, the Miss Global Forum in Riyadh is where global CEOs and tech pioneers are talking about innovation and how it might help diversify the Saudi Arabian economy away from a reliance on oil. Bloomberg's Eric Schatzker sat down with Joe Lonsdale, the co-founder of Palantir Technologies. The question, what will Palantir investor Peter Thiel bring to President-elect Donald Trump's transition team?
Peter's been one of my most important mentors and is one of the smartest people I know. I think that what's unique about him is he's really able to look at things from very contrarian perspectives. Like the way he maps out the world is not the way people probably in the media or in other places are talking about like what matters. And so I think having Peter there is going to give him a really unique strategic perspective, and I'm really excited to see him as part of it.
What do you think his priorities will be?
I'm not exactly sure what his priorities will be. I think that he has a lot of common sense around the things that matter for the tech sector, which for me is a lot of the regulatory reform, a lot of the high-skilled immigration type things. And I think Peter really believes in making America a place where you're continuing to advance and build new things and really think about the future. He talks a lot about how the 1960s were always looking to the future and sci-fi was really in, and how we don't have that anymore. So I think Peter's going to try to figure out how to put that back into place, is my impression.
Broadly speaking, do you think his role ensures a positive, or at the very least an accommodative environment for technology and maybe even Silicon Valley more specifically?
I don't think you can say it ensures anything. It gives me a lot more comfort that we're not going to screw up the trade stuff that I think a lot of us are really worried about personally. And I think it gives me a lot of comfort that it's going to be good for up-and-coming businesses. In terms of the big established tech businesses and the ones that people might label monopolies, I don't know if he can protect them or not. So we're going to see what happens with that.
Given the kind of work that Palantir has done for the U.S. government, what kinds of restrictions does it face in a place like Saudi Arabia or the Gulf more broadly?
I think the restrictions, frankly, in my opinion, on Palantir, and I can only speak for it now as a co-founder who's no longer running it, is really the moral restrictions internally to the company. Like the U.S. government has encouraged Palantir to work with allied countries and wants it to work with people, and going after terrorists is one of the things they do, with appropriate use of data and civil liberties. And I think that there's a lot of governments here that they want to help work with the U.S. and they want to help do that job, but obviously they're not going to want to support regimes that are doing things that are against our own civil libertarian values.
So there's self-imposed gates, in other words.
There are other impositions, such as you can't work with certain parts of China or Iran or et cetera. But I think for a lot of the U.S. allies, I think a lot of the rules become more self-imposed in terms of what us in Silicon Valley want to help with and not help with.
One of the curious things about Palantir is that it remains private. And if I'm not mistaken, your co-founder, Alex Carper, remains CEO of the company, once said that running a company like Palantir would be awfully difficult if it were public. Do you think that's still the case?
I think that a lot of these founders who are, a lot of them very bright people I learn a lot from, overestimate how hard it is to be public. I think that there's a lot of people who are very scared of becoming public, and a lot of my friends who have made that transition, it's not quite as bad as people think.
Do you think the time will come when Palantir can go public?
Oh, I definitely believe so.
How long do you think it'll take?
I'm not sure about that. That's a tougher question. I as an early shareholder, I would like to see it earlier, and some other people, I understand why they might want to delay a little bit too. So I think that's something that they're going to figure out.
Joe, of all the trends in technology today, whether it's big data, whether it's machine learning, whether it's AI or autonomous cars, or anything else for that matter, because the list goes on, what excites you the most?
What excites me the most right now is how all the biggest industries in the world, the fundamental processes that run those industries are being changed over the next 10 or 20 years. And so when you talk about AI or machine learning or other things, those are all tools we use, just like the cloud's a tool we use. But the real fundamental truth is that data right now is not being used to run these industries in the way that it could be. And so that's the big shift that's happening, is there are platforms being put in place to harness data that for the first time is being input into how certain parts of healthcare, finance, government are being run, and are going to make those industries work in a lot better ways. And so I'm really excited about fixing big industries and using technology to run them. One of the questions technologists like you get all the time is what happens to the jobs? How do you answer it? That's also another great question. I think that jobs are not necessarily as much of a zero-sum thing as people think. If it's correct that we're going to get rid of all the manufacturing jobs and all these things are going away, what that would mean is we now have a world where pretty much everything you could buy is extraordinarily cheap because there's no extra marginal cost of human input. So what that means is the cost of everything that we buy goes down by 98, 99%. And in the meantime, I still think there's services jobs, there's entertainment, there's other things people could do to create wealth. So I think that's actually more of a golden age if we can all afford things really cheaply. So it's not nearly as scary as people say. And how do you capitalize on it as an investor, as an entrepreneur? Well, I think the shift that's going on in the next 30 years is that there's platforms being put in place that are going to run the big industries. You have to figure out what those platforms are, what position they're going to be in, and you want to be investing in the best platform companies.
And that was Palantir Technology's co-founder, Joe Lonsdale, and of course, our own Eric Schatzker at the MISC Global Forum in Riyadh. Well, coming up, we'll hear from the newly named NASDAQ CEO, Dina Friedman, her thoughts on how the financial industry will change under Trump next. This is Bloomberg. And the business of running a stock exchange has changed quite a bit. Fees are up, listings are down, and disclosure requirements are as easy as they've been in years and years. But add to that a changing of the guard at the top of one of the biggest operators in the U.S. Bloomberg's Betty Liu talked to the incoming NASDAQ CEO, Dina Friedman, on changes at the exchange.
Well, the great news is that I've been working with Bob now for 10 years, and most notably when I came back as president and now COO, he and I have been really partnered together to make sure that we're optimizing the business. And I do feel that I have my handprints on the vast majority of what we've been driving towards and what we've been focused on within NASDAQ for the last 2 years. So my job is to continue the journey that we've been on to make sure that we continue to be a critical market infrastructure provider and technology provider to the capital markets.
Well, I know, Bob's been very focused on technology, for instance, right, and really expanding those capabilities of the NASDAQ. Is that going to be a major focus going forward for you?
Yeah, I mean, technology is deeply embedded in our DNA. It's how we got started as an exchange, to be the first electronic exchange. And so I think that will continue to be our focus on how we can bring emerging technologies and really drive them to allow our clients to interact with the capital markets as efficiently and as effectively as possible. Right. And that's coupled, of course, with great client service, regulatory operations, and all the other things that come with being a world-class exchange.
Is there anything different that you might do, as much as you can reveal? Is there anything different that we might expect to see out of the NASDAQ?
Well, I think that generally speaking, we've been transforming NASDAQ into a global market technology provider or a global financial technology provider. And I will expect that I'll continue to take that journey with the clients and with our employees as we continue also, of course, to be a great exchange operator.
Okay, so let's talk a little bit about regulations, right? Because now there's a lot of uncertainty just around policies in general. I mean, we were just hearing from President Obama talking about, what may or may not be expected and what he's responsible to, for and not anymore. And there's a lot of talk, as we heard from President-elect Trump, about rolling back some regulations, that have been imposed on the financial world. How is that going to affect the NASDAQ? I mean, how are you preparing for that?
Well, to the extent that we do, in fact, now have a Republican administration, and to the extent that they continue to show a pro-business orientation, that does tend to come with it some level of what I would call balance in regulation. Mm-hmm. And one of the significant areas of regulation that has impacted our industry over the last 7 years has really been Dodd-Frank. And while there are a lot of good safeguards that have been put in place within the industry coming from Dodd-Frank, there's also been, of course, those unintended consequences, most notably that the banks really are no longer really in a position to be able to offer much needed liquidity into some of the markets that we operate. So we'd love to see the opportunity for Dodd-Frank to be modified to allow banks to take responsible risk-taking into the markets as they have to provide that really, really important liquidity.
Modified or retracted? What would you prefer?
I think that we have to recognize the fact that an enormous amount of work went into the creation of Dodd-Frank, and there were a lot of reasons for it. So we have to make sure that we don't have revisionist history. We really recognize the history we come from. But we also know that whenever you put in new regulation, there's always those unintended consequences that come with it. Mm-hmm. So how can we make sure that we are probably more likely modifying the regulation to make sure that it really is, in fact, having the impact that you want it to have? So
do you think, would you say then that a President-elect Trump is good for the exchange then, is good for the financial markets?
I would say that from what we've seen so far, which is only a week in, I would say a Republican administration that has a pro-business orientation would generally be good for the financial industry.
And he's also pledged to cut back on taxes, right? Corporate taxes.
Right.
So how big of an effect is that going to have on the exchange, for instance?
Well, I think that generally speaking, if you have some of the tax policies that they're considering in terms of potential changes in corporate tax rates, the repatriation tax, holiday and other things like that, that really make it so that companies can really optimize the cash that they're generating and reinvest it in the business appropriately and reinvest it in growth. That's just good generally for the economy.
That was our own Betty Lou with Adina Friedman, who takes the helm of the NASDAQ in January. One stock we're watching, Tencent, the Chinese internet giant, set to report third quarter earnings on Wednesday. Now, last quarter, the company delivered $5.5 billion in sales, a 52% increase. Sales are predicted to rise 47% in Q3. Tencent runs China's popular mobile messaging app WeChat and gets most of its revenue from online games. The company recently wrapped up an $8.6 billion purchase of a game maker, Supercell. Well, up next, the CEO of one of the fastest growing startups in Silicon Valley, Tanium. Remember that name, Tanium. Orion Hindawi joins us right now to talk about the future of cybersecurity under a Trump administration. And if you like Bloomberg News, check us out on the radio. My show, Bloomberg Markets, airs at 2 o'clock Wall Street time, and you can check us out at Bloomberg Radio anytime, Bloomberg Radio app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Let's begin with a check of first word news. French President François Hollande says the Paris climate deal is, quote, irreversible. He says the U.S. must respect the decision by the Obama administration to sign off on the agreement. President-elect Donald Trump has called global warming a hoax and promised to cancel the landmark deal. Riot police in central Athens used tear gas and stun grenades to break up marchers who were protesting President Obama's visit. There remains a strong anti-American tradition among some Greeks who resent U.S. support for the country's military dictatorship in the late 60s and early 70s. An Egyptian court has struck down the death sentence against ousted President Mohamed Morsi. He was facing execution for his role in a mass prison break during the country's 2011 uprising. The ruling means Morsi will get a new trial along with 5 other leaders of his now banned Muslim Brotherhood group. Their death sentences were also set aside. Bank of England Governor Mark Carney is urging financial services firms not to make any rash decisions on moving operations out of the UK. This after a European Central Bank official revealed many firms have expressed interest in taking such action. Banks are set to start the process of moving jobs within weeks of the British government triggering Brexit, which is scheduled to begin by the end of March of 2017. I'm Mark Crumpton. It's just after 6:30 p.m. Tuesday here in New York, 10:30 Wednesday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Let's take a look at the ASX after 30 minutes of trade, doing reasonably well, up 0.25%. Oil and energy stocks performing particularly well, following the oil price higher overnight. Different story, though, for a couple of Australia's other key commodities, however. Iron ore was off 9% overnight, coal down 6%. And take a look at Fortescue Metals, one of the worst performers today. That's the iron ore play out of Western Australia. And Whitehaven Coal, the second worst performer on the ASX right now. On the subject of coal, Wesfarmers is looking to sell two of its mines, one in Queensland, one in New South Wales. Sources close to the matter say that sale could fetch up to $1.5 billion. Let's have a look at other markets in the region briefly. The New Zealand Stock Exchange up 0.6% right now, early on Wednesday afternoon. And Nikkei futures also looking positive. And a couple of earnings to watch out for out of Asia today as well. Japan Real Estate Investment and Tencent quarterly earns as well. I'm Paul Allen in Sydney. More from Bloomberg Technology up next.
This is Bloomberg Technology, and I'm Corey Johnson in for Emily Chang. One of the big unknowns concerning the Trump administration, well, there are a lot of unknowns, but one of them is certainly global cyber threats and attacks and how they might respond. U.S. intelligence said Russia was responsible for a hack of Democrats leading up to the election. Trump disagreed with them. Then in October, then candidate Trump said he would fight fire with fire when it comes to cybersecurity.
As a deterrent against attacks on our critical resources, the United States must possess, and has to, the unquestioned capacity to launch crippling cyber counterattacks. And I mean crippling. Crippling. This is the warfare of the future. America's dominance in this arena must be unquestioned. And today it's totally questioned.
Well, is that the case? Joining us right now from San Francisco, Orion Hindawi, CEO of Tanium. Remember Tanium, guys. It's an important company here. The clients include several agencies in the federal government. It's one of the biggest companies in the U.S. It's growing like crazy. Also with us, he's not growing like crazy. He's Bloomberg Technology's Brad Stone. And Brad, I'll let you kick it off.
Okay, thank you, Corey. Thanks for joining us, Orion. Well, let's start with the events in Washington, D.C. As Corey said, candidate Trump rebuffed some suggestions, some evidence, really, that Russia was responsible for the hacks of the DNC, other cyber attacks. Now he's President-elect Trump. So how are cybersecurity firms viewing the election?
So I think we as a community are definitely interested in seeing how he governs rather than what he said when he was a candidate. I think he's got some really good advisors. I think, Peter in particular, Peter Thiel, is going to be a really, really good influence there. I think the reality of the situation is it's a lot harder to do it when you're sitting in the chair and you've got the responsibility of the results rather than just kind of talking about it. And so I think there's a wait and see attitude for everybody.
You told my colleague Emily Chang recently that you meet with Defense Secretary Ash Carter fairly frequently. Do you expect that sort of thing to continue? And what do you make of some of the names that are being bandied about for Donald Trump's Defense Secretary, like Jeff Sessions?
So we've had a great relationship, the whole tech community, with Secretary Carter. I think he's engaged deeply. I think he's done a lot to try and make the DoD a much more approachable environment for companies like ours. His DI/UX initiatives have been really fantastic. I think that somebody who knows how the system works in Washington is really important.
Jeff Sessions, do you think
Jeff Sessions clearly has a lot of experience. I mean, from our perspective, there are two things that need to be fixed. The first one is the whole appropriation system. The way that they're getting budget has been really hard for a lot of our customers, especially in the DoD. If they stop doing things like sequestration, if they stop doing things like continuing resolutions, and they know that they've got the budget to really fight the good fight, that'll be better. And I think the second thing is we really need a president who sees this as a critical solution that needs to be addressed. I think we have both of those things, and I think Secretary Sessions, if that's who is there, understands the problem very well.
Interesting. Orion, I should back up a little bit and just have you maybe tell us just a little bit about the company, what you guys do, how it relates to cybersecurity, and what the government's after.
Sure. So what we do in a nutshell is we provide visibility on very large environments that are changing quickly. So if you look at the Department of Defense, they've got 4+ million computers. And prior to Tanium, it was really hard sometimes to see where they were, what they were doing, whether they were secure, and be able to fix them in real time. And so we've provided a platform that allows them and over 50 of the Fortune 100, many of the large global institutions, to see exactly what they have and fix it. And it turns out that cybersecurity, people overcomplicate this problem. It really is a problem about hygiene. So making sure that you're patched, making sure that the basic things that you're supposed to be doing are being done. At very large scale, that's hard. And Tanium makes it a lot easier to do that much more quickly and more effectively.
Some tech companies have talked, anonymously of course, about actually moving servers overseas. We're worried that maybe Donald Trump comes down on the law enforcement side of the equation when it comes to encrypted information. Is that too extreme at this point?
I don't think it's extreme to be worried about it. I think there's a tension in our environment where privacy and security are at odds. And so, we work with a lot of law enforcement. We want them to be able to have the data they need to do their job, because you and I and everybody listening rely on them to do a good job. Conversely, we have an institutionalized expectation for privacy. And if I had a black hole in my pocket where I could throw whatever I wanted in there and perfect encryption made it so that nobody could get it, the whole idea about law enforcement becomes much more difficult. And so, if you've got data where you can't conceive of the possibility that someone would ever get to it, moving it out of jurisdiction might be rational. But then conversely, Donald Trump has probably the most effective offensive capabilities that have ever been invented in this world. On the cyber side, the NSA and many of the things he governs are tremendously effective, and I think they have long reach. You can move your servers out of the country. I don't know that's going to help you if he really wants that data.
And yet we've seen a lot of companies do this when it comes to their data centers, setting up data centers in Ireland and Europe. We've seen a big business. We've heard from every company from Cisco to Hewlett-Packard on down the line, Microsoft, about losing business because of concern about the NSA. What do your customers say about that going forward with the notion we might have an NSA that returns to some of the practices, the FISA practices of the past that cause these companies to lose business?
Yeah, so we refuse to host our customers' data because I don't want to be part of that discussion. I think it's extremely difficult when you have customers' data and somebody walks in with a legitimate court order saying we want you to disclose it, to choose what to do. I think our customers are better, more capable of making that decision than we are with their data.
So Orion, you've talked about the possibility of a Tanium IPO in 2017. Of course, Snapchat today, Bloomberg reported, filed privately for an initial public offering. Are we going to see a Tanium IPO, and do you think the climate will be amenable to the big tech companies, the unicorns, finally going public in 2017?
Yeah, it's a great question. So to answer it really simply, I've been on record for a long time saying that I think an IPO is the right way for companies like ours to proceed. I think it's fair to my employees, my investors, my customers. We think that the time horizon is reasonable. We haven't started the formal process, but when I look at these big companies who kind of want to stay perma-private, they don't want to deal with investors, they don't want to deal with the SEC. I understand the appeal of that, but the reality is it's not fair to any of the constituencies that we run this company for. So we think that we're going to be ready in the foreseeable future, and I have been really, really clear with every constituency. That's our plan for this company.
I would imagine, Ryan, it also might help you in enterprise sales. It's one thing to have a great solution and have good relationships with your existing customers, but sometimes new customers like to hear that you're trading on a stock exchange and it's a publicly traded company that gives them some new level of trust in your product.
Yeah, the mission that we're on here, we do one of the most important things that our customers will ever buy. We secure their entire core network, their most important information. I think they want to see that we run a reasonable, responsible company, that we're not bleeding money, that we're able to really grow in a sustainable way. And I think that the disclosure rules that public companies have to go through force good discipline in management. And I think that's why a lot of our peers aren't super excited about it. Not because they don't run clean companies, but people don't like it when people are looking at them when they're not doing the right thing. And I think it's actually really healthy for a company like ours to know people are scrutinizing us, that our numbers are being checked, and that our customers know that we're sustainable and that we're going to be here 10 years from now. I mean, I'm hoping that we're all going to be here 10 years from now doing this interview 10 years later, and I get to be in this seat. I have no other dreams other than running this mission through.
Well, that is reassuring to hear. Orion Hindawi, thank you very much, Tanium CEO, and of course, Bloomberg Technology, Brad Stone, thank you as well. Well, still ahead, we're going to head back to Riyadh, Saudi Arabia to catch up with Google X founder Sebastian Thrun and see why he's actually optimistic about a Trump presidency. This is Bloomberg. Let's head back now to the Mist Global Forum in Riyadh, where global CEOs and tech pioneers are talking about innovation in Saudi Arabia and how it might help the company focus on something other than oil. Bloomberg's Eric Schatzker sat down with Sebastian Thrun, founder of Udacity and Google X, started by asking him about the crumbling tech valuations we've seen since the U.S. election, at least until today's trade, and whether a Trump presidency presents a dark cloud for technology. Take a listen.
I don't think so. If you look at the stock and bond market in the last few days, there's been a lot of fleeing away from bonds into stocks because people believe that the Trump administration will spend freely. And for the tech industry, it's an opportunity. For my own company, we bring education to all of America. It's a great reminder that everybody deserves great education, and we're just going to offer it to everybody.
Peter Thiel is part of Donald Trump's transition team. Does he have Silicon Valley's back?
I think he's being debated, and some of the statements he made during the Trump nomination were certainly not welcomed by everybody. But he also has a point. He's looking forward to a different era, and he wants to get rid of big politics. And Silicon Valley is a very democratic place. People are open to accept new opinions all the time.
What do you think he stands for as it concerns, broadly speaking, your industry?
I think what's going to happen is we're going to have a fresh wind in Washington, D.C. And most of us don't know what it means because we never met David Trump before. We don't know what he hasn't said very much in the election campaign. But I'm optimistic. I think he has the nation at his heart and wants to bring us forward.
Sebastian, people know you best for developing or being one of the chief developers behind Google's self-driving car. Every day, it seems like the dream of autonomous vehicles are that much closer to reality. The question is how much closer? How long before we're there?
I think we're really, really close. People underestimate how close we are. So I've sit in Google's cars for many, many years, and I can tell you they drive better than most people drive, myself included. So it's really not a question of technology anymore. It's really a question of business, launching the first products, and then moving to the market.
That raises an important question. What is the business model for autonomous vehicles?
There's about 2 or 3 different models. There's models that Tesla pursues, where a car will offer you as an owner the capability to have a self-driving car so you don't have to focus on driving anymore.
Take my hands off the wheel, so to speak.
So I have a Tesla myself. I love it. It's not perfect yet, but it's actually quite good. And the other one is transportation as a service, where you have an Uber-like company, a Didi, a Lyft, where you go to your phone and you order your car, it comes, picks you up, and then you get transported wherever you want to go, and you just wave it goodbye and it serves somebody else. Now, the transportation as a service ultimately is the bigger impactful disruption in the world because we don't need as many cars. It's been estimated we only need about a third as many cars as we have today if the Ubers and Lyfts in the world would supply us with taxis would come to us self-driving.
So it's pretty easy in that scenario to figure out who the losers will be in a world of self-driving cars. Car manufacturers, presumably, if they're going to make 1/3 fewer vehicles than they make today. But based on what we've seen and what you know, which companies will the winners be?
Well, obviously, tech companies will have a strong position. And in most disruptions, you find that the incumbents were hard to move fast enough.
They're trying.
And even though automotive companies are trying very hard right now, if I were to place my bets right now, I'd place it on companies like Google and Uber and NVIDIA and Didi and many other tech companies.
Now, the United States has long been, well, I say long, perhaps not over the course of human history, but for the past half century, has been the heartbeat of innovation. Where's that going to be 50 years from now?
I believe the United States has a good chance of staying at the center of innovation. And the reason is we attract some of the most interesting people from all around the world. I'm a big immigration fan. I'm an immigrant myself. And I've given more than 1,000 people a job in my little career. But I think it's important for us to keep smart people immigrating to Silicon Valley and other states in the United States. If we don't do this, and if we stop focusing on things like top-notch education, then others will take over, like China.
So we've come full circle. What if a new government shuts the door to immigration?
I just so hope that the new government will not shut the door to immigration. Immigration has been the United States' strongest element. And while there are certainly questions about illegal immigrants and so on, I think we really are a nation of immigrants, myself included.
And if it were to happen, what would the implications be? What happens to Silicon Valley? What happens to American competitiveness?
Well, if the United States shuts the door entirely to immigration, which I don't believe,
entirely no.
I bet other places will pick up and take over from us as the most creative nation on the planet. We need to be open towards smart people, educated people from all around the world, and let them immigrate and let them build businesses and create work for Americans.
That was Eric Schatzker with Udacity founder Sebastian Thrun from Riyadh. Well, tomorrow on Bloomberg's What'd You Miss? Don't miss it. Investor Jim Chanos on the Fed, the election, who's a big Hillary Clinton supporter, and the pending Tesla Solar City merger, which he knows a lot about. That's at 4 o'clock Wall Street time. Also up next, stunning new numbers about the growth of the wealth divide in Silicon Valley and what we can learn from the nonprofits working to fix it. This is Bloomberg. Our story, we've been following Twitter making changes to help users deal with harassment and abuse. It's been a top complaint from users, and one of the reasons Twitter failed to find a buyer for the company a few months back. Well, now Twitter will let users filter out certain words from their notifications, racial slurs, curse words, and their ilk, and the tools will even block entire conversations. The hope to protect victims and dissuade attackers. Income inequality is apparently a big driver of U.S. election results, and sadly, quietly, the income gap is extreme in the heart of technology in Silicon Valley. Silicon Valley has now more than 76,000 millionaires and billionaires, and many of them are giving great gobs to charity. But at the same time, nearly 30% of Silicon Valley residents rely on public or private assistance to get by, and many of Silicon Valley's nonprofits are struggling to keep up. Alexa Cortes Culwell co-founded Open Impact and co-authored a study that deals with these issues in Silicon Valley. Joined us right now from San Francisco. This report is an amazing report, and it's really disturbing because you have some people who've made fantastic amounts of money, who are very active in charity, giving the money away, and yet they live among so much poverty as if the money they're giving away isn't having an impact. Why is it happening?
Well, first of all, what we found in our study is a lot of these wealthy individuals, and it's a huge continuum of millionaires and billionaires, 76,000 of them, as you said, they aren't really aware of the local needs. It's hard to imagine when often these two separate groups of people are living blocks or miles apart, often separated by a freeway. But the first issue is really about awareness, understanding that poverty is happening in their own backyard. And then we feel pretty confident that once they understand the issues, we're hopeful that they're going to start taking action and beginning to think about how they can deploy their philanthropy locally. And there's some great local examples already happening in that regard.
It seems that one of the things I hear a lot about from entrepreneurs who've had some great success in business is they want to reinvent philanthropy. They want to go to the places where they're going to get the biggest bang for the buck. And so quite often one of the things that we see is wanting to go to places where things are cheap, which sure isn't Silicon Valley.
That's right. There's a lot of philanthropic investments that have quote-unquote greater return or social impact. But you also have to understand that we're living in these communities and we're responsible for them. So we're talking to philanthropists about the kind of communities they want to be living and working in, want to be raising their children in. And even though the return on investment, it might be more expensive to get results here, we think it's worth allocating a part of your philanthropic portfolio to these issues, to both enable a community where your employees want to live and work, and also where your family wants to be.
What is the biggest thing that's causing these nonprofits in Silicon Valley doing work with people who need help? What's their biggest problem?
Well, the biggest problem we found when we looked across many data sets is they're being displaced. Much like the middle class and the working poor and the poor are being displaced, our nonprofits are also being displaced. What's driving them out is the cost of doing business, the cost of rental space, having office space to provide services, also wages. Wages are going up. We have one of the highest minimum wages in the nation, and so they're contending with that, but also just competing for executive talent against some of our really competitive companies here. And there's also a talent war. talent can go other places, including the private sector. So they're being displaced in all those ways, and literally often can't afford to operate and serve the populations here, even though those populations are growing and demand for their services are increasing.
We've seen a couple of high-profile examples of these donor-advised funds where a donor like Nick Woodman, the CEO of GoPro, puts a bunch of stock into a fund that he sort of can direct what they want to do with it. Is that working? I mean, are these donor-advised funds, are they actually selling the stock and distributing the money, or is it just sitting there?
Well, what's great about donor-advised funds is they provide an immediate place for someone to make a charitable allocation, and then they get to recommend dollars going out. And those accounts actually have pretty impressive statistics. In Silicon Valley, people are spending and allocating up to 30% of those accounts annually, which is much larger than the 5% required of private foundations. So I'm pretty excited about donor-advised funds because they provide an immediate way for people to get involved in philanthropy, and then they can take their time
and
to figure out where it
break.
goes. Yeah, but I think the issue is how can we accelerate and make them more confident? How can we educate them so they can find opportunities to give and start basically directing that money to causes around the globe, to causes nationally, but also to causes right in their own backyards here in Silicon Valley.
Well, I found the work that you guys did in the report. It looks like it was a ton of work, but it's a fascinating read, but a little bit disturbing to know that we have such poverty so close to such incredible wealth.
Yeah, and I think the first thing we need to do is just actually make people aware of it. And Silicon Valley isn't unique in this way. I think it's more staggering because we know the number of millionaires and billionaires who live here. Yeah. So it's kind of a sexier story, but it's happening in communities all over the country. And so I think the first thing is for wealthy people to really begin to understand the data of what's happening.
I'm going to jump in real quick, Alexa. Thank you very much. I'm going to post a report on my Twitter account at CoreyTV. That does it for this edition of Bloomberg Technology. All of the episodes available live streaming on Twitter. Check us out at Bloomberg Tech every day. This is Bloomberg.